Much like the Krisaka episode, Naval has had a huge impact on my own thinking about the world. He is a treasure trove of many recommendations, and you will probably take down a lot of notes. And without further ado, please enjoy Naval Ravikant. Naval, welcome to the show.
The name that's all the rage these days is Naval Ravikant. The CEO and co-founder of AngelList got far too many pearls of wisdom that we need to tell you guys. He co-founded Vast.com and ePinions, which were both acquired by Shopping.com and went public. He has made investments in more than 100 businesses, several of which were unicorn mega successes as an active angel investor. However, this episode is worth your time even if you have no interest in startups or investing. The habits and beliefs of a highly successful individual are truly the focus of this. Are you ready to learn from the billionaire's trials and errors? Let's break it down, shall we?
Am I investing in the stock market right now? I always run fully invested, for better or for worse. That hurts me in crashes.
Timely investments is the way to go. Naval wastes no time. Making prompt and timely decisions is the key when you're dealing with buying stocks and inflation. Trading in the short term can be quite profitable, but it can also be hazardous. The duration of a short-term deal might range from a few minutes to several days. You must comprehend the risks and benefits of each trade if you want to be successful in using this approach as a trader. You must understand both how to protect yourself and how to recognize good short-term chances. The average price of a stock over a given period is referred to as a moving average. 15, 20, 30, 50, 100, and 200 days are the most typical time intervals. Showing whether a stock is going upward or downward is the main goal. An ideal candidate will typically have a moving average that is inclined upward. In general, you want to identify a stock with a moving average that is flattening out or decreasing if you're searching for a solid stock to short.
I just don't want to invest a lot into a platform that can just disappear, or make me disappear, I should say. Thoughts on precious metals, they don't do anything. They just sit there. They're not a great asset class.
Make sure you invest in a worthy company. He's discovered that when it comes to investing, developing a thesis around a firm is crucial. Even more crucial is the capability to test that hypothesis over time. You must have benchmarks to gauge whether a company has lived up to your expectations since you first applied for a position when you were purchasing or selling. If you can't verify that your investment is on the correct course, you'll wind up clinging to hope, regardless of whether it's a quarterly revenue number or the debut of a new product.
So even if one thing went up, another thing would go down and everything would balance out. But you'd be earning assets, you'd be capturing the maximum compounding available.
Long-term goals equate to compound interest. Renting out your time won't make you rich. To be financially free, you need to own stock or a share of a company. On a podcast, he mentioned one must invest if one wants their capital to compound. Starting sooner is always preferable. It's fantastic to receive a salary each month, but if it just stays in your bank account, you're headed straight for mediocrity. The stock market is the most effective wealth creation tools ever because of its potential for long-term exponential development. When he first started investing, he fell victim to this temptation. He made numerous attempts to purchase the penny stocks that were rising the fastest because a guru was pushing them. Luck can happen, but it isn't enduring. He frequently asserts that trying to become wealthy quickly is the quickest path to bankruptcy. He knows it firsthand, and it's not enjoyable. Your money won't have the chance to compound if you can't stay in the game. Play long-lasting games with long-lasting individuals. Compound interest is the source of all rewards in life, whether they be in terms of money, connections, or knowledge, according to the Naval. This refers to adopting a long-term buy and hold investing approach rather than engaging in short-term trading or attempting to time the market. In reality, studies reveal that the S&P 500 outperforms the most active stock traders by an average of 6.5% annually. Investors who lack patience often suffer the consequences, whereas patient investors frequently prosper. Sticking with it for decades is actually how you get huge returns on your investment, as Naval put it. It's simple to become engrossed in the daily swings in stock prices. Occasionally, it is beneficial to step back and consider the bigger picture. Your financial approach cannot be utterly ruined by one bad day. You should always choose to invest in founder-led businesses when choosing which companies to buy stock in. To ensure that the management's incentives are in line with mine, try to find management who own a sizable percentage of the company's stock.
You have to put in all the iterations, 10,000 iterations, not 10,000 hours, to figure out what to do and how to do it well. But once you know, you don't have to put in the time anymore. It's your judgment. And the judgment comes from clear thinking. The clear thinking comes from having time to reflect and to pursue your genuine intellectual curiosity. And you'll see that a lot of the great investors, for example, just sit around reading most of the time. Or Warren Buffett famously plays a lot of bridge. Obviously, not everyone can be just an investor, although that is becoming more and more democratized.
Enhance your knowledge. While watching CNBC during every waking moment of the trading day may sound like a great way to improve your skills, it'll do the exact opposite. Being aware of what is happening is vital to a certain extent, but adhering to their narratives all the time is harmful. Although it may be modest, he has discovered that it has a profound impact on his prejudice, anxiety, and greed. If you want to avoid getting persuaded into beliefs that aren't your own, having the ability to tune out the noise is crucial. With those who genuinely have something to lose, there will be less noise and more signals. Naval was quick to tell Tim Ferriss that one must learn to control their thoughts so that one can make financial decisions based on logic and reason rather than gut feelings. Naval researches mental models because they serve as the basis for sound judgment. Understanding mental models enables you to make wiser decisions under chaotic or demanding conditions. Unfortunately, a lot of luck is needed, at least in the IT industry. Place, time, market forces, timing, and regulatory action in favor of or against. There are several factors that determine where platforms are migrating and which open source initiatives surface. You can never anticipate success on the outside. The failures are what you can foresee.
What do you look for in a founder? So I'm just going to ask you that. Like, what are the things that you look for in founders?
A few essential traits to stand out. For new or old investors, keep your ears open. Naval told Tim what essential traits make a person stand out and buy his trust. The first requirement is intelligence. To be smart, you must have a basic understanding of what you're doing. Although it's unclear, by speaking with folks, you can get a sense of whether they are knowledgeable about what they are doing or not. Do they possess wisdom or specialized knowledge? Have they given the issue any thought? Age is not a factor. It doesn't matter how long they've been doing it. What matters is how well they comprehend what they're about to do. The key is intellect. Energy, because starting a business is incredibly challenging. Long-term success only goes to those that endure because it takes a lot of time. Therefore, if someone loses motivation, approaches this in a tentative manner where they are seeking frequent affirmation or are easily distracted from their course, they won't succeed, especially in the context of a highly competitive business. Integrity is the ultimate factor, because a person with strong intelligence and energy but little integrity is likely to be a hardworking, intelligent criminal. Go big and avoid keeping cash in your home. When discussing the unreliability of cash, Naval was quick to mention on a podcast that he chooses to stay free of paper money. It makes sense given the shift of currency we're experiencing in real time. That's one paperless world you've got to become acquainted with. Many central banks are experimenting with digital versions of their currencies to keep their money current. Like Bitcoin, these currencies are virtual, but unlike Bitcoin, which is a private company, these currencies are issued by the government and behave very much like conventional currencies. The plan is for central banks to first launch these digital currencies in a restricted form, existing alongside cash as merely another form of payment, and then gradually expand their use as they gain acceptance and cash disappears. The demise of currency is imminent and will have profound implications for the financial sector, the economy, and society at large. In contrast, the U.S. Federal Reserve has mainly been silent. This might be a missed chance. The United States should create a digital dollar because the advantages of a digital currency vastly exceed the disadvantages, not because of what other nations are doing. Security is one perk. Digital currencies are generally more secure than cash, which is a problem for both individuals and organizations because cash is susceptible to loss and theft. Although there is a risk of electronic hacking, it can be controlled with modern technology. Consider the payment that the American government offered to homes as part of the coronavirus stimulus packages to understand how this might be beneficial. Millions of low-income households had issues or delays receiving those payments because they lacked bank accounts or direct deposit information on file with the Internal Revenue Service. Many of them experienced delays or losses in receiving checks and debit cards, and con artists discovered ways to swindle them out of their money. Central bank accounts might have decreased fraud and facilitated a quicker, safer, and easier administration of stimulus payments. What can we learn from Naval's errors? Ben Silbermann provided him with every opportunity to invest, but he declined to use Pinterest. While he observed that the figures increased from month to month to month, he was still hesitant. Eventually, he got the opportunity to invest for the first, second, and third times. At one point, even his wife insisted he trust Pinterest and invest in it, but he let it slide. This is only one such instance where he messed up. He might have been a YouTube advisor in the beginning. Despite their generosity in offering him stocks, he never accepted them. There are numerous misses. Even with Twitter, he had a chance to become a part of it, but allowed it to slip from his hands too. He doesn't think too much about poor investments. In the startup industry, one wagers that 90% of these businesses will fail or simply refund your money, while the remaining 10% will achieve enormous multiples. Investments in Twitter and Uber have likely increased by a combined 400 to 4,000 times. Therefore, the gains from the winners can be astronomical and potentially outweigh the portfolio's losses. One might tend to ignore the downside and always concentrate on the positive. Most of the negative blunders that come to mind, in my opinion, are errors of omission rather than commission. Usually, when we invest in a business, the most common reason for commission errors is that we didn't have enough time to feel comfortable with a deal. We became caught up in the moment, someone was pressuring us to make a decision right away, we lacked the information or lacked the gut instinct for it, and maybe acted out of fear of missing out. Having said that, a great business will raise money rapidly. And take it from the guru himself, maybe money isn't everything. In the now infamous podcast with Tim Ferriss, he told him that everyone after a certain age, taking charge of his pleasure, tranquility, and quality of life becomes independent of money. And one of the lessons you discover after you become wealthy is that money solves your financial difficulties, but it doesn't necessarily put you in a state of pleasure. Money doesn't make you happier, at least as per Naval. There is nothing that will make you happy forever, so you kind of had to accept that truth all the time. You have to be accountable for your mental health to see past the joys and limitations of money. That's it for today's video. Thanks for sticking around until the end. We'll see you in the next one.